Housing. We all aspire to own a home. It's put a roof over our head, but it has become impossible, even for a college-educated 30-year-old couple to buy a house these days. Why? Well, because of inflation. Okay, house prices are through the roof. Although, are we seeing some cracks in housing prices? Are we going to see a correction in housing prices? Well, if they cut the rates now or start cutting the rates, hopefully mortgage rates will come down because that is the largest part of home affordability index. And maybe people will be able to afford homes again. For example, I bought my house 22 years ago in Granada Hills for $825,000. At that time, I thought that was an insane amount of money, which 22 years ago, dollars were worth something. Dollars are worth garbage now, right? With fiat currency debasing of the US dollar, you know, losing buying power. But, what did that do? Where is that house today, 22 years later? Well, let's look at it. That house today is worth about $1.7, $1.8 million. Okay, I have all that equity in there. However, you're going to say, oh my God, that's so much money. Well, not so fast. Let's figure that out. How do we figure that out? Well, let's say it's 1.8 million. It has gone up, appreciated by $1 million. Well, let's take that. What is that? That's about 110%. Okay? Okay. Take 110% divided by 22. That's exactly 5%. Guess what, folks? That's exactly how much inflation is in the country. So basically, my house has kept me above water fighting inflation. Actually, inflation, I think, is more. I think it's about 6 or 7%. However, if I did not buy that house, okay, where would I be? My money would be trashed, right? So it has just kept pace with inflation. It has kept me above water. Now, at $1.8 million, the numbers are much larger, obviously. To afford a house today, to afford my house today, there's no way I could afford my house today. Let's go with a 20% down payment, $350,000, $60,000, and have $1.5 million mortgage. To sustain that at 7% mortgages, for me, it would be impossible. For me, it would be impossible. How about a college graduate? How about and we're talking California prices, obviously. How about, a 30-year couple, business, have jobs, and they can't afford a house. Median housing prices in the U.S. are over $500,000. This is the median. And with the interest rates, with the mortgage interest rates going up from 3% when we had ZIRP, zero interest rate policy, to now, which is 7%, right? Not most, pretty much everyone, unless you're in the top 5%, can afford a house, to buy a house. Even a starter home is $500,000. In California, for example, a starter home in the boondocks probably would be $600,000-$700,000 today. Okay. But again, hard assets, right? I talked about it in the first segment. However, there are some cracks showing up in the housing market. Maybe that would be good news for first-time buyers. And here it is. U.S. housing market weakness is growing. There is certain weakness in certain markets, but then doesn't mean there are not other markets that are doing the opposite, increasing in value. Obviously, the chart is pretty self-explanatory. The ones on the blue on the left are prices going up in those cities, and the chart on the right, half of the chart is red with the red bars. That's housing prices going down. In June, this past June, half of the top 50 metro areas, this is the top 50 metro areas, saw year-over-year home price declines. Austin, Texas, Tampa, Florida experienced the steepest drops of over 5%. That's a lot. These are the two bars away on the right, Tampa and Austin. They were followed by Miami, Florida, Dallas, Texas, Orlando, Florida. It seems like Florida is taking the lead in price cuts. Now I'm hearing the same thing is happening in California, and same thing is happening in Nevada, same thing is happening in Arizona. Well, yeah, okay, good. Price correction comes. Maybe if the rates go down, mortgages will become more affordable, and then there will be By the way, it's the first time, for a long, long time that the sellers are outpacing the buyers at the moment. So it's not a seller's market; it's a buyer's market. So if you're in the market for a house, your chance may be coming up. By comparison, in May and April of 22 and 20, of the 50 major metros saw declining home prices. So going back to 2020 and 2022, the same thing was going on. But ultimately, just like the stock market, housing makes a new high. It keeps pace with inflation. It protects you from debasing of the US dollar. In November, just 7 of the 50 largest US metros recorded year-over-year price drops. Okay, cracks in the housing market are beginning to show. Well, the right side of the chart, those are the cracks. Well, you're going to say, Sergio, what are the blue ones? Well, the blue ones are Philadelphia, Louisville, Charlotte, North Carolina. There are places that housing prices are going up because they're more affordable, although the biggest part of this affordability game is going to be interest rates, right? So maybe that's why the administration would like interest rates to go down, because they're directly related to mortgage rates. At 7% mortgage rate, even on a starter home of $500,000, with somebody going in with $100,000 down and $400,000 mortgage, the payments are over $2,500 on a 30-year fixed. Well, that number was literally half 5 years ago when the rates were 3.5%. So affordability has a lot to do with interest rates, and I wish and I hope that interest rates do go down, mortgages come down, and people can afford a home, because owning a home, is your base, right? I mean, people are going to say, oh, I like renting. I like the gypsy lifestyle. I like going around. I mean, yeah, it's good. But, if you're a single person, maybe. But if you're married, you're having kids and starting a family, owning your home at your ground, at your base, it creates this security for you. And I wish that for everyone. But at these prices, and one other part that I talked about in the first segment was hard assets. Real estate is a hard asset. Why did my house go from 825,000 to 1.8 million in the last 22 years? I've been in the same house since 2003. And when I first bought it, it was at the top, by the way. I bought it at the top. Then we had a correction to GFC. Actually, my house went down to like 650,000 in price, which was quite a bit of a drop. It was about a 20% drop. But is there going to be another great financial crisis? No. Is that going to be allowed? No. But if interest rates come down and housing prices correct 5-10%, it'll give a lot of people a chance to be homeowners, and I am all for that.